Welcome back to EDS, and in this video we're going to do a little portfolio review and show you the real life ins and outs of what it means to manage risk and make adjustments and the realities that come along with selling premium or writing options contracts. So this is a live account. The market is currently closed. It's a Sunday, and every week we like to do this little portfolio review. For anyone that has seen the other portfolio reviews, you'll see that we have been in this UAL position for quite a long time now. This is the order chain for UAL. As you can see, we've made a lot of adjustments, collected a lot of premium. We're in a unrealized loss at the moment. Of course, we are managing this position, and we're going to try and work it back to a break even, or even a slight profit, or even a small loss. It doesn't really matter. If for every loss that you would have ordinarily taken, if you can work that back to a break even, then you don't really need to worry about your winners. Your winners will take care of themselves. As long as you worry about your losers, and you could turn your losers into smaller losers or even break even or slight profit, you'll be fine. So UAL. Let's have a look at UAL. So this is on each candle represents a week. This is over quite a few years. As we can see here, we got into UAL around here, and UAL has literally just done a straight line up. It's just gone completely up. These candles are weekly candles, by the way, not daily candles. So this is our original this is our original call at the 50 strike, and this is now our put, which has been inverted, and it's currently at the 85 strike. So as price moved up higher and higher, we moved the put. The put was originally down here. Our original put was at 35 around here. As price moved higher, we moved the put up. We kept moving up, higher and higher and higher and higher, all the way until now it is at 85. And of course, there are expiration dates on these contracts, so we have had to roll out these contracts into later cycles as well, helping us to collect further premium. So the position as it currently stands, we've got 26 days left to expiration. So this week, at some point coming up, we will probably roll to the next expiration cycle, and that will help us collect even more premium on the position. And so basically, the objective here is just to keep collecting premium, keep selling time until we end up in a position whereby the stock hopefully moves back down within the range here, and that should hopefully give us an opportunity to exit. Of course, price has just gone one direction. Nothing moves in one direction forever. So the idea behind managing risk and following the market is that eventually, people that are, if you look here, there's been a long consolidation period, right? And then the market's just completely ripped upwards. So a lot of people are in a lot of profit right now, and just naturally, due to market dynamics and just human behavior, some people or a lot of people will want to be taking their profits off the table. A lot of people, we're at all-time highs right now. This would be a smart time to take some money off the table. And I have a feeling that a lot of people will do that. However, of course, I do not know for sure. And it doesn't really matter, because if the price keeps going higher, we'll just keep following the market. And if price goes lower, great. It will hopefully give us an opportunity to exit. If price keeps going sideways, we'll just keep selling time until we collect enough premium to the point where we can just essentially uninvert the wings, uninvert the strangle here, buy back the guts and sell the wings, as Tom Sosnoff would say. And hopefully we balance the deltas and we'll look to get out there. So it doesn't really matter what the market does. We've got a plan in place. It's just a case of, do you want to tie up this amount of buying power for this long? It's your opportunity cost on the line at the end of the day. I personally have the opinion of just fighting every position. One of my mentors, he's a firm believer in just fighting every position. And I've kind of adopted that same mentality. Of course, there are some times where it isn't smart to do that. However, in this instance, we're at all-time highs. Conceding at this point wouldn't make sense after we've worked so hard to get to this point. We may as well just see what the market does over the coming weeks and see if we can get out at a break even or so. Well, we probably won't be able to actually get out for a break even anytime soon, but as long as the market, reverses a little bit, that will help our P&L a lot. Also, what it will do is it'll allow us to sell. To generally, we'll be able to collect more premium as we roll out in time if the market hasn't moved too far away from my strikes, for the most part, when you are looking at an inverted position. Um, so with that being said, that's pretty much it for UAL. It's just a waiting game. This is the order chain again for anyone that wanted to see and just follow along. But this is a reality of what it looks like when it comes to managing positions and selling premium. So for anyone that wants to know how much buying power you should be allocating to your positions and how you should be structuring your portfolios, click the link in the description, click on the free position sizing template, and it'll take you to this spreadsheet here. The way it works is you're entering the size of your portfolio at the top, then you enter in what the current VIX level is below, and then everything will then be automatically calculated for you. And at this point, you simply just need to use this information to form the backbone of your portfolio. It will tell you how much buying power you should be allocating to any single defined risk position, undefined risk position, how much of your portfolio you should be allocating to short premium strategies in general. And as long as you follow this guideline, you will be absolutely fine over the long term. If you want to learn in more detail, again, link in description, click on EDS Premium and get yourself signed up. Inside, you'll have access to our portfolios that will allow you to see the positions that we're placing, how we're managing risk, the adjustments that we're making, all in real time. There's also a full course inside as well, so no prior knowledge is required. We will teach you everything that you need to know, start to finish. So this allows you to learn the theory and see how it's applied in real time by seeing what we're doing in our portfolios. It is also a private community, so if you get stuck, you can speak with like-minded individuals or with myself directly, and there's a 100% money-back guarantee. So once you have studied our full course, followed our trades for at least 6 months, if at that point you aren't profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free on your part. It is £1 a month to join right now. The price will be increasing. However, once you're in, the price is locked in for you for life. So you are definitely rewarded for getting in early. And with that being said, I will see you guys on the inside.